everybody. Thank you for coming to the Mint INTERAC Analyst Day. Would also like to welcome James and Kirkland for being here and helping us understand more about INTERAC. So before we go to the panel for the discussion, and thanks Neil and Vikas, who are all part of the Mint team. I'll give you a quick introduction into Mint. I'm assuming some of you are already familiar with the company. So Mint is a globally certified payments platform, and we have basically repurposed the platform to service the needs of the underbanked. So what does that mean? So if you want to go and service the underbanked segment of the population, you need to have a much different delivery model, infrastructure, and technology to service them. And number two, to go after the underbanked segment, you need to have a mobile-enabled technology platform. So what Mint has done is we have built a fully PCI-compliant MasterCard, UnionPay, and we'll talk more about how we are bringing INTERAC into our platform. We have a full payments platform, and on the other side, we have built a full mobile-enabled technology and infrastructure connected to our payments platform that allows our customers to engage with us using their mobile devices. And what is that significance? If you go to the underbanked end of the market today, the smartphone penetration globally is significantly high. Our current main market, which is UAE, has over 90% smartphone penetration. The data costs have historically come down. So the inflection point to deliver financial services to the underbanked using technology and mobile enabled, the moment is now. That is what makes Mint so unique. It wasn't 3 years before, and it won't be 3 years later. This is the moment when the inflection is happening. The macro trend about very high smartphone penetration, our customers being very engaged in using smartphone, they know how to use social media, they know how to use mobile applications. On the other side, the plummeting cost of data. If you look in history, in examples, you will see many such instances. If you look at the success of YouTube, YouTube's success came just about the time when broadband took over in North America. If you look at the success of Uber or Airbnb, they both came right at the time of Great Recession. Because people were looking for a job, people were looking for that extra income, those two business models came and clicked. And believe me, there were a lot of examples before that which tried but never worked. So the moment for Mint right now is very unique. We are at a very interesting time where the underbanked is rapidly being mobile and technology savvy and enabled. And on the other side, the cost of data has come down. And our platform we have built in a unique way to take advantage of it. With that, I will kind of hand it over to the panel who will give you more on how the INTERAC is further strengthening our platform.
Great. Thanks everyone again for coming. We really appreciate it. I am Neil Gilday. I'm the CTO of Mint. Vishy, I'm not sure if you mentioned, he's the CEO, and Vikas is the Director of Capital Strategies. Today what we're going to do is we're going to go through a brief introduction to Mint. We're going to touch on INTERAC. We're going to go deeply into INTERAC, and we have James Good and Kirkland here who are from INTERAC, heading up the international divisions, and they'll be talking. And then we're going to talk a little bit about how Mint and INTERAC come together, and then we'll open it up for questions. I do want to say, though, it's following on what Vishy said, it's exciting times for us at Mint. And that being said, it's exciting times with financial inclusion really about to take off, and we think we're well poised for that. So maybe I'll carry on here. The always favorite disclaimers, you're going to have those. Do you want to run through a little bit?
Sure. So again, as Vishy said, a lot of people are familiar with Mint's story, but where Mint is today, it's, specifically serving one customer segment in UAE, which is migrant workers. And as some of you might know, that in the UAE, there are more than 5 million migrant workers who are not banked, and their employers have to pay them through a cashless system, which is by law. So Mint provides that solution. So Mint is a payroll provider, a payroll solution provider to employers who have these migrant workers. Right now, the infrastructure which we have built, as Vishy mentioned, we service more than 400,000 migrant workers who are getting paid through Mint's payroll system, which means that Mint effectively is in a way a bank for the unbanked. And that infrastructure is going to grow. We see huge potential. And now, in order for us to service these migrant workers from the digital mobile banking perspective, we needed to build that infrastructure. So over the last 5 years, more than $50 million has been invested in this infrastructure. A lot of money came from Gravitas Financial. So one thing I wanted to just highlight that Gravitas Financial, which is the parent company of Mint, its largest shareholder. We have been working on this file for more than 4 years. So this team that you see here is also, of course, Gravitas' team, me, Neil, and Vishy, and Mint is very close to Gravitas. So now that we have this infrastructure, now that we have this ecosystem, we could take it global, and that is how we built it from the day one. We did not need to build this kind of massive infrastructure, but we saw the potential, as Vishy said, in terms of the underbanked, the unbanked. There are more than 2 billion people who are underbanked or unbanked, and the only way you can service them is through mobile banking, and you need to have that infrastructure. So we built it. So now we are poised for global expansion. More than 5 million in UAE alone, more than 20 million in the Middle East region where the similar law has been passed. So we are going to address that. And now that we have the core of the infrastructure in place, we can add all these things around it. So we don't want to get into too much detail. This is not Mint's investor presentation. This is about INTERAC and the opportunity, but that's the big picture.
Maybe I'll just jump in here. One of the things that we're very fortunate about is that we have a great place to actually exercise all of this, and that being the UAE. Our operations and our client base currently is in the United Arab Emirates, and it's a phenomenal place. Not only is it a very wealthy country, it's a very progressive country with respect to infrastructure. And they have a large, as Vishy said, they have a large underbanked population. That population is heavy remitters as well. There's not much payments infrastructure in place, particularly for the underbanked communities. And as well, there's a very significant move to actually go from cash to cashless. So we think it's a great environment to operate, and we're quite excited to roll out many initiatives in the next little bit. And some of the initiatives, again, this is a good summary here. We have we do about $1 billion of U.S. payroll right now that we're processing. We have 400,000 cardholders, just under 1,000 corporate clients that we work with, and multiple financial institutions to make this all work. One of the big things that's coming is our mobile wallet, which is going to enable a whole bunch of new services, and some of those, such as simple click to remit type stuff, pay bills, as well as maybe get a loan, that sort of thing. And again, you'll see some of the partners that we have. We have some great partners, including we are an agent for the central bank for the WPOS program and such. So. One of the things that we're doing here is, we have a great client base already, and all we're doing right now to date is actually doing payroll, which is actually a very modest revenue line there. And this is a per customer chart here, and these are all the services that we're looking to add. And right now we're only doing the one at the very bottom there, below the gray line, which says payroll, and it's $16, and we believe that there will be considerable take-up in all the other items there. So mobile top-up, there's a labor guarantee, insurance, there's a big movement right now to actually have employee-paid health insurance to supplement that. Remittance, obviously, is very common. Probably about 80% of the salary earned is sent back to the countries. Overdraft and then lending. So our job in the coming months is to just slowly start to add those additional services to our existing clients. And And look, for us, we're at an interesting point now. We've been talking about this for the last month or so, and we've got these new products and services. We see there's opportunity to grow the product penetration within our current client base, but we also see a great opportunity to grow that client base too. The other thing we like about this business is there's a real durability to our earnings, and so we think it's a fairly unique business. There is global potential, but we don't even have to leave the UAE to make a really interesting and attractive business. So just wanted to, just sort of for the people maybe who haven't heard the Mint story, we just want to do a quick overview. Today's purpose really is to actually dive into INTERAC and then the Mint relationship with INTERAC. Do you have anything else?
No, well said. Yeah.
Okay. All right, so I'm going to turn it over to James and Kirkland now.
Good, thanks very much. My name is James Good. I'm the head of our International Business Development Group. It's my colleague Kirkland. I'll let you introduce yourself.
Sure, Kirkland Morris, VP of Enterprise Strategy. James and I together have been charting a course, I suppose, to some extent internationally, looking for opportunities to help enable local providers in disparate parts of the globe to achieve the same kind of success in their home markets that INTERAC has been able to achieve in the Canadian payments environment. James is going to talk, I think, a little bit about the INTERAC story and a little bit about the story of INTERAC and Mint and what that partnership is designed to accomplish. And I think we're happy to take questions, et cetera, as we go.
And yeah, just to kind of build on that point, so we are by design a domestic network. We serve the Canadian market. We have started to undertake some activities internationally with a great partner in Mint. So over the next 20-25 minutes or so, I need to tell you our domestic journey over the last 35 years. I'll get into what we've been doing internationally and then kind of conclude with what we're doing with Mint, and we can kind of go to a Q&A from there. So I'll start, whoops, I think I went the wrong way.
That was the right slide, by the way.
So I'll start at the beginning with a little bit about INTERAC. So I'm assuming many of the people in this room are Canadian and have an INTERAC card at a minimum in their wallet. We're best known for two services. The first being INTERAC Cash, which was our origin in the mid-1980s. The banks were looking for a network to connect their ATMs. And rather than use one of the more traditional global networks, they decided there might be more efficiency, more cost savings, more strategic control in having a network of their own, controlled by Canadian banks to connect their own networks, and that's kind of led to the formation of INTERAC in the mid-1980s. In the early 90s, we piloted something called debit at the point of sale. We now call it INTERAC Debit. It was a magnetic stripe card and a PIN. We ran a pilot. It was enormously successful. To the point where, as you know today, virtually every Canadian has at least one card with an INTERAC brand on it in their wallet, and every electronic acceptance terminal, for the most part, will accept an INTERAC card. So that's kind of what we're most known for, certainly by consumers, but we do a lot more than that. So in addition to that, we developed almost 10 years ago a solution called INTERAC Flash, which is our contactless solution that lets you tap a card. And that will be a part of the discussion that we'll go into a little bit later today. Through an acquisition of a company over a decade ago, we acquired some assets that were the foundation of what was originally called INTERAC Email Money Transfer, now morphed, so that would allow you to leverage the power of a bank's online banking to send money to a recipient only with their email address. No personal financial information required. That's evolved enormously over time. We've got huge amount of growth on that solution, on that product, for example. It's now branded as INTERAC e-Transfer. It's not only with online banking, it's with web banking. It's not only with emails, it's via SMS and mobile numbers. And it was originally intended as a person-to-person money transfer solution. It's now kind of designed to fulfill many use cases, so person to business, business to business, and we've added functionality over the time to make those types of transactions easier. INTERAC Online is our e-commerce solution. It again leverages web banking authentication in a e-commerce flow to allow a direct payment via debit to a merchant. We've also, through a partnership with a company called NICE, NYCE, in the United States, have access for our cardholders to over 2 million point-of-sale devices to do debit transactions there. We've got inbound ATM or ABM, depending on whether you're American or Canadian, partnerships with UnionPay, Diners Club, Discover, and Pulse, so that cardholders from around the world can come and use their transactions, their cards here. And finally, on the mobile front, we've got a whole host of mobile-enabled solutions, Apple Pay, Google Pay, Samsung Pay, and a more proprietary flavor called HCE, or host card emulation, which is also available for kind of white-labeled wallets. Oops, I keep putting the wrong button here. Kind of touched on these points earlier, but again, we're kind of a near ubiquitous acceptance present in almost every wallet. And as you know, for the most part, the terms debit and INTERAC are almost interchangeable in Canada. We are virtually the only game in town when it comes to point-of-sale debit. Again, founded in the mid-1980s, we've had a leadership position in Canadian payments, both from kind of our early days in debit to an enormous amount of innovation, which has taken place certainly over the 35 plus years, but we kind of look at that hockey stick curve. A lot of it has happened in the last 7 or 8 years, and we'll go over that in just a moment. Between all our solutions, we process more than 6 billion transactions annually. We are becoming internationally, in the work Kirkland and I are doing, much more of a voice in the community of domestic payment providers. So around the world, operators who either look like INTERAC or intend to look like INTERAC look at us as kind of a beacon, something to strive for, and so we end up having a lot of conversations with either people who intend to create new domestic payment networks or who are already operating one but are having challenges either from a regulatory point of view, an innovation point of view, competitive point of view, and so we often intend to share our playbook with those types of people. I might pause here and have Kirkland talk to you a little bit about our organizational structure and our governance model, which is a little bit unique and has recently undergone some changes. So maybe I'll just not on the slide, but
So I don't know how familiar folks are generally with payments. INTERAC grew up as a very sort of prototypical member-owned, member-governed payment network, essentially an association where our largest shareholders and the majority of seats at our board table come from essentially our member financial institutions, which include Canada's big 5 banks, Desjardins National Bank, CUCC, essentially the top layer of Canada's sort of financial institution community. We've recently gone through some organizational changes designed to help us improve funding flexibility, to give us an injection of independence in our governance framework and to allow us to operate a little bit more efficiently. We had grown up with what I often describe as a somewhat Byzantine organizational structure behind the INTERAC brand. We have, from the mid-1980s, been a single, clean, customer-facing brand, but behind the scenes, a somewhat more complicated organizational and ownership structure. As of January of this year, one clean company, which we now call INTERAC Corp, whose major shareholders, as I say, are the major players in the Canadian financial services industry. Our board is a combination of direct nominees from those shareholders, along with a collection of highly qualified independents. We are at the end of the day, a comprehensive payment solutions provider, where our job largely is to focus on developing and delivering cost-effective shared payment infrastructure that allows those financial institutions, Canadian processors, and their downstream partners to deliver world-class products and services at highly effective cost behind the scenes. So that's kind of what our essence is. We are a privately held company with no defined aspiration to be anything other than a privately held company owned and managed by those major payments constituents. Yeah.
Great. Okay, there was a slide prior to this which didn't appear well formatting. Maybe if we share this later, it'll be better, but suffice to say the slide was a little bit of our history of innovation, and it showed that hockey stick curve where we launched a product every 5 years or so for the better part of 2 decades, and then in the last 8 to 10 years, an enormous amount of innovation focusing on a variety of mobile solutions, tokenization for those who are familiar with that concept, rapid innovation on our e-transfer solution, contactless payments, the introduction of secure chip cards, those type of activities. Which kind of bridges into this slide, which is, so we're speaking with many existing domestic networks and prospective domestic payment networks. There's a huge amount of competitive pressure from the global networks who are looking for new places to gain transactions. Clearly, when you operate a global network, the cross-border card-based transactions are a point of differentiation, something that's difficult to build. But they now have their sights on domestic transactions as well. And we went through an enormous amount of competition in Canada, defending our space successfully for the time being, but we expect that Canada will still be in the sights of global networks to try to get a share of the market. There's also a challenge for some of the smaller networks to fund innovation. It's just more difficult to invest in new technology when you're servicing a country as opposed to the globe. Despite that, what we're seeing is, what we're hearing from a lot of banks around the world is that this kind of desire from the global networks to continually increase fees and to impose controls and regulations is creating this space in many markets around the world where banks or entrepreneurs or others are saying there's a space in here to have domestic transactions processed, controlled, priced domestically. And yes, the international providers are best at cross-border, but there's this space opening up, and we're getting a lot of inbound inquiries, and clearly our partners here have seen that this opportunity exists in UAE to begin with, but I think across other parts of the GCC likely as well. Talk a little bit about our journey on EMV, which is really just an industry abbreviation for chip cards, the chip on the card, and mobile in Canada, because it's foundational to some of the technology we're providing. We have licensed to Mint in UAE. So we announced our intention to move to EMV in 2005 to chip cards. There was what Kirkland often refers to as a great collaboration among Canadian banks, the INTERAC, the international schemes, retailers, payment acquirers. The whole community of payments came together and worked kind of collaboratively on this rollout. And in fact, at that time, what INTERAC did, for convenience and at the request of many of our member banks, was we borrowed, for lack of a better word, some technology, some chip card and terminal technology from the global networks, and used that to process transactions over our own network. Rolled out successfully for a few years. The global networks then started to introduce their contactless solutions, which you probably heard branded as PayPass or PayWave. And we wanted to get in on that game too. We understand that was going to drive more transactions, displace cash. It also permitted credit card companies to really go after those smaller ticket items. Typically, people before contactless would pull their credit card out for larger transactions and use their debit card or cash for smaller, but when you had the convenience of tapping at a Tim Hortons or somewhere else, you could now move your credit card down into $2 or $3 transactions. So we knew we had to get in the game, but we were blocked. We were told the technology you're borrowing, you can't kind of go to the next level, and we knew that contactless was important in the short term, but that was going to be a bridge to mobile. So as you seed contactless terminals, you're creating now a device you can eventually tap your phone again. So we were in a bit of a challenge, and it forced us to develop our own chip card specification. And so it put us in a good position today where we now have this strategic asset that allows us to use our own technology and divorces us from having any fees, rules, requirements from the global schemes who would otherwise be able to have a little bit of say in what you're doing because you're using their technology. And part of that, we'll come back to that kind of concept because it's an important part of what we're doing internationally. So all INTERAC debit cards and bank machines were fully chip enabled by 2010, and as of 2015, everything on our network is chip to chip. So if you try to swipe your magnetic stripe anywhere in Canada, it will not be accepted. I've got a hard time understanding which one is forward and which one is backwards. For those who aren't aware, the kind of primary driver of that chip on your card is fraud reduction. As you can see, we in 2009 peaked at an unprecedented level of $142+ million in fraud losses in the INTERAC system. Over time, as we got devices converted, and then kind of mandated the thou shalt use the chip or else the card transaction will be declined. We're at a point now where we've got very little fraud left in the system, and most of that is fraud internationally, specifically in our case in the US where we have a partnership. The US is still not fully finished its migration to chip cards, and therefore there are still spots where that card will work on a mag stripe in the United States, and that's why there's fraud. As referenced a couple slides earlier, so we started our kind of journey on the contactless space in 2010. So we've got a fully accredited EMV, again, is the industry buzzword, but kind of to all the global standards, a solution that works both contact chip and contactless chip. You're probably well aware it's widely accepted. Everywhere you pretty much expect in Canada to be able to tap your card, you can. Those terminals, and once to deploy terminals is a time-consuming and costly process for acquirers, for merchants. They don't want to touch their terminals after they've done something to them. You simply won't be able to go back in 18 months and say we've got another change for you. So when we were seeding our INTERAC Flash contactless card solution, we knew that our mobile solutions were going to need to ride on the same software, on the same kernel that was already in that point of sale terminal. And so we moved aggressively over the recent years. There was, from a competitive point of view, everyone jockeying for position, payment networks, banks, mobile network operators, the Apples, Googles of the world. We're all trying to figure out what their piece of the pie was, and our mandate really was we've got to protect our space and enhance our value proposition. We spent, I think, an enormous amount of energy and capital getting to a rapid rollout of these solutions for our market. I talked earlier about the challenges in developing solutions when you are servicing one country. And I would say Canada, in terms of our population and our transaction volumes, is probably just big enough for us to be able to justify it. So we did our first mobile transaction in March of 2013. Today we support all the major OEM pays, as well as we have a solution that is kind of defined in the industry as host card emulation. It lets you get your card into any phone, despite the device type, in a proprietary wallet. So this could be a bank wallet, an INTERAC wallet, a Mint wallet, a UAE bank wallet. So, the question often comes up, you guys are a very successful domestic network operator. What are you doing internationally? We come at this from the point of view of, as I referenced earlier, we went through a period of intense competitive pressure where we really had to defend our space. We came out the other side extremely successfully. Not only have we defended our traditional space, we've extended our product set, further entrenched our position in the Canadian market. And as we looked around the world, we saw our peers in other countries who weren't so successful. And we kind of said, we've come out the other side with all of these assets. They're valuable. We've also got a kind of a playbook on how to go from a humble beginning to a kind of successful outcome. And so why don't we spend some time having conversations with our peers around the world, either who are operating networks or who want to operate networks, to share some of our learning, share some of our software and specifications, and to provide consulting services where necessary. And so that's kind of largely where we are. Our kind of lead product is our contactless solution. So what's branded as INTERAC Flash in Canada, this contactless EMV solution. What we provide, and in a sense, part of what we provided to Mint under license for UAE is the right to use this kind of white labeled solution on its own proprietary network. Because we have no desire to operate our own networks or to compete for those transactions in other markets, our agreement says that we'll never come back for transaction fees or impose rules, and it really is just foundational platform on which you can build a network that you own and control fully without any kind of INTERAC coming and telling you how to run your operation. So you retain local autonomy. It also is, as I said, because you touch the terminals once, it's a bridge to mobile solutions. I probably won't go into too much detail in this slide, but just to say our EMV solution is built to all the international standards. It is just a different flavor of what the global schemes do. And when you have licensed it, you can go to all major vendors of cards, terminals, test tools, ATMs, fuel dispensing devices, and you can acquire product that is built to the INTERAC certification process. As I touched on, the bridge to mobile, built to work on that terminal infrastructure is many of our mobile solutions and our HCE solution. We've already begun that conversation with Sequent. Another part, I won't get too technical into the concept of tokenization, but in essence, when you're in a mobile transactions, you need a way to provision the card to the phone. There are many providers. We've partnered with one, made an introduction to Mint. I think that they provide a very capital efficient way to do tokenization relative to the other solutions that we've come across. And so while we are in the early stages of developing the concept of the national network on cards in UAE, the stepping stone to mobile is incrementally is not that much more time or capital to get there. The other thing we do is, so kind of this solution that we provided to Mint, which is kind of foundational at the point of sale, bridging to mobile. We also have on offer, we're going to continue to evolve our roadmap in Canada, and our licensees, Mint being one of them, has the opportunity to continue to come back and say, what are you doing for Canada? Are those things available internationally? And so support for more wallets, in-app and in-browser. So this is going to be extremely important as we move forward. So the ability to make a payment within an app or a browser directly from your mobile device, as opposed to today where you often have to enter card information into some web interface. That credential is on your phone, securely stored and authenticated. So that's kind of at the forefront of where we're at. Internet of Things and all the kind of innovative solutions that are coming. So the ability to kind of tie, to the extent you're interested in, to the innovation that we're doing in Canada and use that abroad exists. As a case study, so our first licensee was in Norway. An organization called BankAccept, who, the best way to describe them is they were the INTERAC of, or are the INTERAC of Norway, running a successful payment network. But we're in the same spot we were, which was they had launched some chip cards using global scheme technology, and we're told you can't go any farther with this technology. We licensed our contact and contactless specification to them in 2016. Within 6 months, they were rolling out with cards and terminals in their market. I think there's a little bit more plumbing work to do in the Mint world. But suffice to say, because our solutions are so broadly supported by the global vendor community, it's not that challenging of a job to find cards and devices and implement solutions. They've also licensed many of our mobile solutions, which they are in various stages of implementation in their market. And of course, in April of 2018, we announced our agreement with Mint to provide them with some exclusive rights in the UAE for INTERAC card, terminal, and mobile solutions. And we work very, very closely with Neil Vichy and the team in UAE to begin the process of rolling out a national scheme. I'm not sure there's anything you want to add, Neil?
Before we move on, just maybe, Kirkland, you could talk to a little bit about the scale or size of Canada and the ability for you to be different from the other domestic schemes from a capital expenditure investment perspective.
Yeah, sure. So James, I think at one point used the phrase "just big enough." INTERAC for a very long time has been a national payment scheme that has been a leading provider in this market. And given our leading position and Canada's level of maturity from a payments perspective in general, from a technology perspective in general, INTERAC's been a fairly watched network globally. So even when we were very inwardly focused, we were a network that folks in a lot of parts of the world paid a lot of attention to. We've had just enough scale, so Canada market of 30 odd million and INTERAC as really the leading debit solution provider in this market have had just enough scale to allow us, with some strategic commitment backed by some capital from our shareholders, to make the kind of scale investments in a technology roadmap that have allowed INTERAC to sort of stay toe-to-toe with the leading edge of payment technology. And it's a position that is almost unique among domestically focused networks worldwide. So outside of giant players like China Union Pay, given the size of the Chinese market, or there's the providers of RuPay in India, the local scheme there, where there is just natural national scale that allows them to be market movers on their own. Most of the domestic providers around the world are relatively small, have faced stiff competitive challenges from the global schemes, Visa and MasterCard in particular, and have faced meaningful challenges in finding the strategic commitment from local players in their market, and to be blunt, finding the scale and capital and capability as small organizations to do what INTERAC has had the luxury of. As I say, when we talk about, I 15 or so years ago, I guess, started work on our industry business case for chip migration. So the exercise of changing the magstripe cards that were in Canadian wallets for 30 or so years to the fancier chip cards that are in your wallets now. And it is a scale investment. It is a gargantuan financial commitment to replace a complete national payments infrastructure, somewhat at the network level, but it's those endpoints, the cards in wallet, the terminals on counters, where so much of that cost is incurred. And INTERAC had just enough scale, just enough wherewithal, and as I say, just enough strategic support from our constituents, believing in the value of maintaining control of a domestic alternative as opposed to ceding that space to the global providers, for us to stay at the forefront. So INTERAC is in a relatively privileged position. We are one of the very few domestic networks in the world that has a tokenization infrastructure to support mobile payments. We were the first domestic scheme globally to launch our token service provider. We were the first domestic scheme in the world to launch with Apple Pay. And so INTERAC has been able to stay at that forefront. There are a lot of networks in a lot of countries who look with some envy at us, and where we now have either existing or prospective or potential partnerships where we can leverage what we've done to enable them in a way that is not competitive. We have no direct interest in competing with Norway, competing in Norway with BankAccept, competing with Mint in UAE, competing with the local providers in other parts of the world. So we are a benign solution provider that can help to, by exporting some of the things that we've done well, pieces of our solution set that range from specifications and certification programs through to actual software components and SDKs and so forth, to allow them to fuel their own technology and product roadmaps in a way that doesn't require them to have the same scale that we've had, but they can leverage, I suppose, the scale that we enjoy. Yeah.
So maybe we'll move on now to INTERAC and how it ties in with Mint and where we're going with it, and then we'll open up for questions to the group. Okay, so the INTERAC partnership, we're going to throw around a lot of terms. One of the things, I had the good fortune of sitting on planes and in hotel lobbies with these guys, and over the last 5 years got a fairly good education on domestic schemes and all the lingo and acronyms used. But, I think there's a couple things, global schemes, sometimes global networks, so that's your MasterCard, Visa's, Amex. Domestic schemes, that's INTERAC or Bank Accept, that's what we're endeavoring to build. An interesting one is an on-us transaction. That's a transaction that is independent of a scheme, so it's your card in your point of sale, and thus you get the benefit of actually collecting all the fees. Interchange is that fee that is charged on a transaction. Point of sale, or POS, that's the device that actually performs the transaction at the merchant. Co-badge, I'll come back to that, but that's a very important technology that INTERAC actually was the leader in co-badging. If you look at your cards in your wallet, you'll see that on your debit card, it's sort of confusing, but you actually have Visa on there and INTERAC. And the fact that that card is enabled with 2 schemes on it is very unique. I think you're maybe the only people in the world that do that, or maybe there's a couple others now. But
yeah, I think there's lots. So INTERAC as an early, Canada was an early adopter of EMV chip. It caused us to encounter a number of hurdles that folks in other parts of the world hadn't yet bumped into. Some of the challenges around co-badging, the coexistence of INTERAC as a domestic scheme, and then whether it's Visa or MasterCard to provide international access on those same cards. There's some unique stuff that has to happen inside the chip where the 2 applications, essentially the 2 software pieces are co-resident. We did some work with EMVCO, the standards body for chip cards, to help iron out the way certain of those things would work. And yes, I suppose we were a leader, but there are literally millions of those co-badged cards in issue in markets around the world where there is a local player with some strength. And where the international schemes are also present with those financial institutions in some form.
Great. So keeping an eye on time here, I'm going to keep moving along. So one of the things is, the payments ecosystem, has a lot of members in it. And first off, the parties, you have your cardholder, your consumer. You have the bank that actually issued the card. You have the bank that is actually working with the merchant to acquire that transaction. You have the merchant themselves, and then you have the scheme. In order to execute a transaction among those parties, you need a whole bunch of payment instruments. So, and again, when you actually start to look at the list, in order to facilitate all types of transactions, there's a lot of different components there. You have the card. The technology in the card these days is quite robust. You can even use the same card that's in your wallet to open the security doors at your office and things like that. Point of sale, mobile wallets, they haven't really taken off quite yet here, but in places like China, they're pervasive. ATMs, obviously, online websites, that sort of thing, kiosks. Your processors also need to be able to speak the language of the scheme. And again, near field communication, that's the sort of that's the underpinnings of a flash transaction. Again, you need to be able to speak that language too. So what's amazing in our partnership with INTERAC is they've actually worked out with all the various vendors, or most of the vendors of these cards, of the vendors of the point of sale machines, your mobile wallets, as we spoke, Apple, Google Pay, that sort of thing. They've actually worked with them all and got them all to write to their spec. And so that's incredibly powerful. So, I just wanted to simplify in case, this is all a little confusing, but the consumer, he presents his card, he does a transaction at a merchant. That communication between the card and the point of sale uses a scheme. The merchant then needs to go, the point of sale needs to communicate to the merchant's bank. Again, that travels and communicates through the scheme. Then it goes to the consumer bank. Again, they're talking the same scheme, and then all the way back to complete the transaction. And again, so it's a fairly involved transaction and ecosystem in order to complete a transaction. I'm always quite amazed because you pull out your card from your wallet and it actually seems pretty easy and everything works and it works really fast, but there's a whole bunch of parties and players in order to make that happen. So the merchant economics, I sort of simplified this, and I think, today was really to focus on INTERAC, and we definitely want to dive into where we're going with the INTERAC partnership from an economic perspective. But, have you ever wondered why there are no loyalty points on your debit card? Or how the Canadian Tire dollars work, and why does that make sense? Why do they give you, is it 4% or does it come down a bit? It's around 4% at one time they'd give you if you use cash. Well, the reason is that the economics on a transaction for the merchant are different, whether it's cash that's used or credit or debit. And so, what's interesting is, using your Visas and your MasterCards and the global schemes, the transaction cost traditionally can be anywhere from 1.2 to 1.8%. Whereas in Canada, the debit transaction cost is less than a penny, or?
Our piece is less than a penny, but a merchant would typically pay a couple of pennies to a few pennies.
Right.
All in.
Almost.
And so there's massive acceptance from the merchants, but because there's not that much money to run loyalty programs or to give cash back in the form of Canadian Tire dollars. So, but the merchants are very accepting of a domestic scheme. So again, one of the things that, and Vishy, jump in here if you'd like, Mint has a large initiative to actually move into providing merchant services, particularly to our community. The community of the underbanked, when they go into their local store, generally are all using cash in the UAE. And there's an opportunity now to actually graduate them with that card to actually perform a card transaction, as opposed to going to the nearest ATM, taking the money out, and then going to the store and using the cash. And so we are actually providing a merchant services package in order for these merchants that service the underbanked so that they can actually facilitate a transaction. The great thing is that they're in these emerging markets, developing markets, the penetration of point of sale is very low, so there's not much hardware for us to displace. And if you go into the underbanked, it's even lower proliferation. So, and the merchants are going to be very accepting of these low rate type debit domestic schemes that we're using. The UAE environment is, again, I said earlier, we think it's a phenomenal environment to work in. Currently, there is no domestic scheme, so we're not competing with anything. Their central bank has said openly that it's determined to actually get to having a domestic scheme. And generally what we find is in the UAE, whether it's building a subway, metro, underground, or a building, they tend to go with the best provider in the world. And we're very happy that we're working with, we believe, the best provider in the world with respect to domestic schemes. They already have a centralized payments model, which is going to make our job a little easier than what you guys endeavored to do 35 years ago on a peer-to-peer model. And there is one new competitor in the marketplace, but they actually are on the rails of one of the global schemes, and the economics are no different than a global scheme, and we're delighted to compete with them. So.
The other thing that we have is that we already have a large existing portfolio which is growing, and we can actually incorporate the INTERAC technology within our existing portfolio and kickstart the launch of the scheme. That is a huge competitive advantage that we have compared to a new provider who has to sign up the first client. In our case, we are the first client for the technology. That is a huge competitive advantage for us to get these programs started, have a big number of customers use it, go to a big number of merchants and get them to accept it. That is another big advantage that Mint has.
So again, what's our strategy? Obviously, acceptance is the challenge here. How do you get lots of people using this, both on all aspects of the ecosystem? And it's a bit of a puzzle because the merchants, when we walk in there and say, hey, why don't you use our merchant services, our point of sale machine, they're like, well, how many cards do you have? Well, we don't have any cards, but we need merchants. And then on the card issuing side, when we go to our payroll clients and they're like, well, you gave us this scheme, but where's it work? Well, we're working on that. It doesn't really work. So this is a bit of our puzzle, but as the great thing is that we actually have 400,000 and growing card holders. So using concepts like co-badging, we can actually make this card quite operational across all different situations. We could have a MasterCard capability, and then we can have our own scheme, which we are calling OMLA. And if they walk into a store and the merchant actually speaks OMLA, then their point of sale speaks OMLA, then they'll use the OMLA rails. If not, then they just default over to the MasterCard rails. So again, making that card highly functional so it works everywhere. And we see that as an important part of our strategy. And initially, we will focus just on internal use, and then eventually we'll graduate to external use, working with other banks, getting other banks to issue our cards. But again, we have a large enough client base that we don't actually need that to be successful. So we signed in April. We're working now. We've established our project teams. We've had trips back and forth, and we're beginning our proof of concept. And really, quite simply, what we want to be able to do in a handful of months is be able to say, hey, look, our card speaks the INTERAC language, and our point of sale machine that's ours speaks the INTERAC spec and is loaded up with the kernel. And as well, the switching software that is our banking card management system actually speaks it, and they all communicate, and we did our first transaction. That is our first goal, and then we're going to expand from there, and we'll start to add more banking switches and make it acceptable for other institutions to start issuing those cards. And then in the meantime, we're always working with the central bank. We have a good relationship. We've even put some papers forward to actually partner with INTERAC to actually be the domestic scheme, and we think that we have a good shot to win that. So one of the things, though, that I just wanted to touch on, I won't dive into too deep, but there is, the landscape is constantly changing. We don't see this here in Canada, but the QR code as a way for the merchants to affect a transaction is quite common. We see, and maybe you've heard about WeChat, where in their mobile wallet they've embedded these QR codes that allow them a phone-to-phone transaction to happen. And it's quite pervasive, incredible, rapid adoption. We see the QR code transactions as a way for us to quickly deploy cost-effectively solutions to the underbanked. We don't have to deliver hardware necessarily. We can actually deliver even just a sticker that they stick on where normally would be the checkout, and it's sort of like the reverse of a Starbucks transaction. If you think about it, Starbucks, they give you a card, then immediately you somewhat tokenize or virtualize that card into your Apple wallet. I'm an Apple guy. And you actually go to check out, they punch in everything that you're having, and then you present that barcode. The barcode reader then scans it, and the transaction is completed. The QR code system that we would be using is almost the reverse of that, where actually the merchant presents the QR code and the phone app actually is performing the transaction and then completing it that way. Again, very light touch from a technical perspective and an infrastructure perspective for the merchant. We can deploy these QR codes incredibly rapidly. So, and finally, just to give you an idea of the potential of where we could go, if you take the numbers of just under 6 billion transactions that are performed, we think, there's probably a good 1 billion transactions that we could do annually. At a rate of about maybe 12 cents, it's a considerable reoccurring revenue stream that can be created there. So, again, I just wanted to sort of give a little bit of a color as to where we're going on this, and maybe now I can open it up to any questions that you have for our guests or ourselves.
Will Mint have anybody on INTERAC's board? Will there be a Mint board member?
Sorry, on what?
On INTERAC's board.
So
INTERAC mentioned that they have representatives from the big banks and other highly qualified independents.
So I believe I was supposed to be active, but I didn't get the letter. Is that true?
Sorry, Neil.
So no, that'd be great, but no. I think it's just recently that you added 3 independent directors. One is the former CEO of CGI. The other one is venture capitalist with the Anderson, where was his browser, Netscape or something? And anyway, so right now there's only 3, and we won't be having a seat on the INTERAC board anytime soon.
Okay.
But
The other question I had, I recently learned that people who have the cards, most of the people who have the cards are, construction workers in the United Arab Emirates who are foreign. They come from India, Pakistan, whatever. They fly them in, they put them up, and give them lodging, give them food, and then they get another $1,000 tax-free for the month. Now, $1,000, and I don't know how you're going to sell them all those extra services, like how they're going to be buying insurance, how they're going to be doing all this, because a lot of that money is going to be sent home so they can provide for their family. Maybe they keep $20-$30 for a beer, on Friday night or whatever, but it's all going home. So how are we, like, maybe there might be an opportunity for overdraft, perhaps, but how is insurance going to be sold? How are all these other consumer services going to be sold? And people who got the card are, got to send it all home, all the money.
Yeah, so just for the benefit of people who are watching online, the question is that how you're going to sell value-added services, mainly financial services to this underbanked, unbanked population, who on average is earning about $5,000-$6,000 a year, tax-free, but $5,000-$6,000 a year.
Yeah.
So the fact is that our estimation is that about half of the money they send back home, which is true, but probably half of the money they spend in the UAE. And the kind of products we're talking about, there are two sets of products. One are for employers who are our clients, B2B, and one are for employees who are the unbanked employees who have the cards. For employers, the products are compulsory. You don't have any choice. So payroll is a compulsory product. They have to have it. Health insurance, the basic health insurance, is also a compulsory product. You have to have, if you bring a migrant worker in the country, you have to give them a basic health insurance. So that product is sold to the employer, not to the employees. And last but not the least, the labor guarantee, which means that employer who brings a foreign worker has to deposit $800 US in a bank and get a certificate and send that confirmation to the Ministry of Labor. So that is also a product which is sold to employer, which we can sell as well. But that is also a source of deposit eventually if we had a bank license. We don't have it today, but we are going in that direction. On the employee side, which is unbanked, which is where you are talking about, the question is that how do they spend on these products? We are not inventing any products for them. They are doing money transfer to home right now. They are topping up their mobile phone right now. They are taking some small loans from unorganized sectors right now. They are taking the plane back home right now. So what we are going to do, we are going to just pool all those demands and provide a mobile technology at their fingertips. So instead of taking a bus and going to the exchange house to do that money transfer, they can do that with a click of a button. So if you look at our presentation where we say that right now, Mint's revenue model is approximately $10 per card per year, which employers pay us to manage the payroll, and we think it will go towards $100 per card per year, is about 2% of the average annual income of these people who are our card holders. So are they spending about $100 a year on these products? Yes, today they are spending actually more than that on these products. So we are just hoping that they will spend that in our ecosystem through our mobile app and our mobile wallet, because we are the payroll provider to them.
That's a good question. I should know that. So you're saying you're getting $10 per card right now?
Per year.
That per year?
Revenue,
because that is just for payroll?
Yeah.
That's just for the labor guarantee and everything else?
No, just for the payroll. The most basic. So that's the subscription revenue, in my opinion. Think of, almost like Amazon Prime, they give you the Prime membership for almost, that's the cost leader, but they expect you to buy all the goods and services. Subscription model, revenue model is very, very powerful, very, very sticky. And that is why those companies have much, much higher multiple. And Mint is no different. Mint has the same subscription model, a business model. Once we have that, we are not going to make a lot of money on the payroll. The real potential is after that. And that is where we are today. That is the inflection point for Mint. But for that, we needed the infrastructure, which we built in the last 4 or 5 years. And now we are ready. Now, the good thing is the infrastructure is transferable. You can take it globally. It's not just restricted to UAE. Wherever we have underbanked, unbanked, we can take our platform. And we don't have to go and start a new business in Africa, for example. we can find a local partner who becomes our sales organization, and we fulfill everything else. So that's the power of Mint's infrastructure. I hope I answered your question.
Yeah.
So you mentioned infrastructure, but where the problems sometimes arise, and you know, the credibility of you two gentlemen being here is enormous. I kind of came in midway, and I was trying to think of what roles you were in Mint, because I never met you before. So is sort of the technology timeline for integration. I mean, in many small companies, and you know, you've been at it for a number of years, you built up the infrastructure, the past is the past, but in terms of your roadmap, I mean, you know, what's the wild cards of delays, you know, because obviously this is topical now and ambitious, but time's your enemy, and you know, not false expectations, but everybody's always optimistic, more optimistic than you should be. And I don't think these gentlemen would be sitting here if they didn't believe you're going to cross this chasm. But I was just wondering, like, you know, what you've built in, and really what are there any things that you're sort of sitting today that you got to kind of crack a code to get there?
So a couple things. First off, you know, this chart here and our penetration of products into our current client base doesn't require any of INTERAC stuff, period. Okay, so we're carrying on and we're driving forward on all of that stuff. On the INTERAC side, though, our real key is to do a simple proof of concept, which is a very controlled environment. And by doing that, we already have some of the various agencies already having an eye on us, already put requests for information as to us being a local subset scheme. And so we need to be able to just say, hey, look, we got our proof of concept done. And my hunch is that it's not, hey, we got to finish it completely on our dime and there we go. It's actually going to be probably partnered with some of the government agencies.
Just to add to Sheldon's point here, very good question. So there are two parts to that question. One is, as Neil mentioned, you know, our core infrastructure to service the cardholders, you know, the underbanked, unbanked population, which is 5 million strong in the UAE alone. And that part is complete in terms of infrastructure built. We are just waiting for the central bank to give approval, you know, so they have to give a no objection certificate. As soon as we receive that, you know, the app gets launched, and then we are driving all these products through the app. Now, the second part is more broader INTERAC opportunity and the whole domestic scheme and the infrastructure, and that will take some time. You know, we are not saying that it will be overnight, but what we see, as the gentleman mentioned, that UAE as a country, it's a small country, 10 million people, but 400 billion GDP. It's not insignificant. And right now, they do not have domestic debit scheme. If I do the back of the envelope calculation, half cash, half cashless, that means about $200 billion of GDP is going through cashless system without domestic debit scheme. My hunch is, as a country, they have a toll of about $1 billion, which is going outside of the country because they don't have a domestic debit scheme. A huge saving can be achieved if there was a domestic debit scheme. And that is the opportunity we have with INTERAC. Now, it is going to take time, but we will have product rollouts, we will have solutions which we can launch on a smaller scale and show the benefit to the merchants, to the economy in general, and go from there. So that presents the opportunity, and beyond UAE, we have opportunities hopefully in other countries too, as we start to work with INTERAC.
So what's your time just on you know, revenue ramp? Have you guys talked about that?
You don't want to take it?
On revenue ramp with respect to
our...
Yeah, so again, so that's non-INTERAC stuff. I mean, we're moving Q3, Q4. We just want to see consistent revenue ramping, and you know what you're going to see.
It's like official launch in Q3.
Yeah, you're going to see
launch any week. It's a Ramadan month, so hopefully by June 15th they will be.
Okay, so it's imminent.
Yeah, imminent. Yeah. And then the certain products which do not require mobile application platform to be launched. For example, insurance is something which can be sold without a mobile platform. So we are starting on that. We got the provisional license to be an insurance broker so that we can sell that product. But in terms of ramp up, I would say 2018 would be the build year when we launch and then we start. And by end of 2019, our goal would be to achieve a 20% adoption rate for our products, which is 1 in 5 for most of the products. And if we did that, we get about $130 per year per card revenue
How
run
do you
rate.
market yourself?
In the UAE?
Yeah.
Oh, we have huge, marketing program and everything is ready
The
to be
awareness
launched.
won't be a problem.
Awareness won't be a problem. We will have kiosks, we will have, evangelists, we have marketing programs, contests, all those things lined up.
Help desk.
Help desk, exactly, yeah, exactly. So all those things are lined up to. Just to give you an example, when we did a pilot of our mobile application, we had more than 10,000 downloads of the app, and we only had one product live, which was mobile recharge, mobile top-up, and 14,000 mobile recharge were done using the app. So this population which we are talking about is mobile savvy. They may not be high income earner, but in that part of the world, this is where I find, like when I talk to people here, they think, do they have a smartphone? Really? They earn only $5,000. Everybody has a smartphone. Not only that, some people have 2. Because the connections are not good, then they have 2 phones for making sure that they can talk. And everybody is savvy in terms of using those to do transactions. So that won't be a problem. It's more about getting the adoption, getting the education going, and getting the adoption ramping up.
Is Mint gonna have to do have you got enough money, or is Mint gonna have to do a financing?
Well, there's no imminent need for financing. Can Mint use money? Absolutely. You just saw an example. I mean, such a big opportunity in front of us with INTERAC alone in the UAE. So we are still in somewhat build mode, and I think next 3, 4, 5 years we could be in build mode. But for the core infrastructure, we have that. We don't need much money for that, and Gravitas, as the parent company, has funded it for more than $20 million in the last 4 years. So if needed, we would do that again. But we may go to the market for a small amount of money, and there are some specific opportunities, for example, which can lead us to raise more capital, but at the right time, at the right level. Of course, we are very cognizant of the fact that we don't want to dilute ourselves at very low levels by raising a lot of capital, right? So we will be pretty, careful in terms of how we manage.
The tricky part, it looks like, remember you had that chicken and egg argument where you would go to a merchant and they would say, how many cards have you got? 400,000. No one knows how to do it. And you would go to another segment and like the card maker, who's using your cards at merchants? Well, nobody. That's what you have to crack, right?
So that's only for the Interact OMLA, what we call our version OMLA. And again, though, with the co-badging, we don't really have to crack it. We're just going to, every card we issue always has OMLA on there. And then one day, all of a sudden, we've got 400,000 MasterCard co-badged OMLA cards out there. And by the way, merchants, so that's the way we're going to do it. And then we'll be like, yeah, we've got 400,000 cards.
Maybe I can explain that. What you mean, Neil, that these cards are MasterCards today. Most of our cards, payroll cards, are either MasterCard or Union Pay cards, and they're accepted in the merchant community today. If we co-badge them with INTERAC scheme, or based on INTERAC, a domestic debit scheme, now those cards can also be used from the debit perspective. So if those cards are being accepted by this merchant who is accepting MasterCard, he or she will also be able to accept that card from the domestic debit scheme. Okay. So we have a decent base of cards to go with, and this card base is increasing. Our goal is to have 1 million cards within 12 months, payroll cards, and they're all MasterCard or Union Pay card, and hopefully they will also be co-badged with INTERAC technology and will be called OMLA, which will be domestic debit scheme, which we are launching. So we have a decent, I would say, 1 million would be 10% of UAE population. It's not insignificant to get kick-started. For our core business, there's no problem. We already have 400,000 plus cards and going towards million. And we are launching the mobile application, which we have to drive the adoption for.
So maybe I'll just wrap up with a short experience I had when I was in Dubai last. I was rather jet lagged, and I decided to go to the mall, the Dubai Mall. I don't know if you've seen the pictures with the glorious fountain. It's amazing. It's incredibly well built. And I'm walking and walking. That's what I do, try to keep away from these guys, keep me out too late. And I just was walking the mall, and sure enough, I turn around the corner, and there's 200 workers lined up at an ATM machine, and there was another 50 lined up at the foreign exchange right beside it. And so they are all lining up, and they're taking out their money off of their card, and they walk over and then get in the next line up, and then they actually remit the money. And so our bet is, hey, if we can actually, we know who they're remitting to, and we know their employer, can we actually get them to download our app and hit the remit button rather than get on the bus, which takes them 25, 30 minutes, go there, line up for an hour, line up again for 20 minutes, and that whole process. We think that we can actually do it and also do it at a cost that's better for them. So again, we're in a great place, we believe, to drive adoption. We don't need more customers, we just need customers to buy our essential services or their essential services that they need. So on that note, I just thought, I wanted to thank everybody once again. Really appreciate the time. I know everyone's busy. We'll be milling around if you have one-off questions, and thank you very much.
Yeah, thank you so much.
Thank you.